Howdy there, folks. Welcome into this four-piece here today. 4 videos up here for me to react to. First one up here, Palantir has done a really good job in gaining momentum going into AI. So an analyst is getting, let's just call it pretty bullish around Palantir stocks. So we'll speak about that. Obviously, Palantir stocks having a really good day. Then we're going to listen to these folks argue about some big tech stocks, including Nvidia and others. And I'll react to that, kind of give my opinions and perspectives. Then we're going to react to this little 2-minute clip. Tech rally draws 1999 comparisons. Okay. That should be an interesting one to kind of share my opinions on. And then the last one up here, AI is going to be a technology that impacts productivity, says Palantir co-founder Joe Longsdale. So looking forward to getting into that one. Appreciate y'all joining me as always. Before we get into this, make sure you smash that thumbs up button and also subscribe to the channel if you're not already. We're at a new all-time high subscribers in the history channel. Also, just so you guys know, I'm doing a free Twitch live stream on actually it's about 48 hours from now when Tesla has their earnings. That's in about 48 hours from now. So if you want to join me for that live stream, check out the pinned comment down there, follow me on Twitch, and make sure you have your notifications on so it'll notify you. It's going to be like a 3-hour beast live stream we'll do for Tesla earnings. We'll react to the conference call live on there, all that good stuff. All right, guys, let's get into this.
To break it all down, didn't start out this way in January, but boy, did it come back. So does that make the setup for earnings tougher, Brent?
Yeah, I think the setup's tougher given the magnitude of the tech run we've had. We've highlighted there's always black ice in Q1 when stocks go higher. Last year, you didn't have this in tech. You didn't have the euphoria that you're seeing today. So there's a little bit of concern there. But I think we're still ahead of accelerating fundamentals, continued focus on margins, and then the AI wave, which is really not even hitting yet. The hype is there. The revenue reality of AI is not happening until the back half of this year into early next year, at least in software. It's obviously happening in semis with Nvidia, but we think the setup still looks good relative to fundamental strength. We hosted 20 plus software companies the first week of January, and every one of these companies said demand is stable. No one is saying it's back to the excitement that we saw during COVID, but I think we're back to a better spot in demand from all of our channel checks, and you're hearing it across internet and software in all the checks that we do.
So I'm curious why it's not showing up in revenues yet for these tech companies, because I was mentioning everyone was talking AI in Davos. Everybody has their use cases, and it's happening now, whether it's a medical device company or a furniture retailer. They're all talking about how they're using AI, and they're working with their enterprise software providers to do it. So why isn't it being monetized yet?
Well, I can answer that question. All these companies are going to see the numbers start to hit in 24. Like when you start to grow a new business, like the numbers are so meaningless at first until you start to reach to scale. And so the numbers will start adding up in 2024 for many of these companies, the actual AI plays, and then obviously in 2025 and beyond. But that's the way every business starts out. It's very meaningless. I mean, heck, with the iPhone in its first year, hardly sold any units. Didn't mean it was a flop product or it wasn't going to show up in revenue. No, it just takes a while. I mean, Tesla in its first years of trying to scale vehicles usually sells very few. And then, as it reaches the second year, third year, all of a sudden, boom, whoa, now the money starts flying in, right? So, I mean, that's just, I think it's common sense business. I don't know why so many people have had trouble wrapping their heads around that. That's every business ever.
I think part of it is early adopters is number one. Two, the analogy of, you put a pool in your backyard, no one really cannonballs in right away. And I think you're seeing people dip their toe in. It's analogous to having young kids. They're slow into the water, right? And the same thing is happening with CIOs. They're very slow into the AI water because you're risking your potential corporate data. You're risking bad outcomes. You're risking your data. And so I think what you're seeing is companies are putting big governors on AI. The biggest constraint in our work is really around security and safety of the data. And so I think everyone is in an experimental phase. No one is in a mass market rollout. And that will move from
93% move. But once again, remember, many of those stocks in the Magnificent Seven have just started to hit new all-time highs. So that's just a little factor. It's not like they've blown, all of those stocks have blown through their all-time highs and they're like 30% higher, 40% higher. Many of them, actually, technically, even a stock like Amazon hasn't even busted through a new all-time high yet. Let that sink in for a moment. Same thing with Google.
Or dip your toe into the cannonball phase, into 24, into 25. And we're seeing it in all the data. You can even see it in Microsoft, right? Amy Hood guided to little AI revenue in the front half of the year, more AI revenue in the back half. Their back half is starting now in their fiscal year. So even CFOs and CEOs are guiding to this. But I think to most people, the AI movement is all hype right now. And you would expect the revenue based on all the conversations everyone's having around it. The reality is it's tiny. For most tech companies, it's low single-digit percentage of their revenue.
Hey, Brent, since we have you on, I think you cover, I'm pretty sure I see on your coverage list, you cover Palantir.
Here we go.
And if I'm
Palantir,
not incorrect,
baby.
you have a sell on it.
What?
Stock's up almost 9% this morning. Any idea what's going on?
Wait a minute. I thought this guy was going to be bullish on Palantir. No. He's got a sell rating on Palantir. Based upon this headline, I was like, oh, this guy's got to be bullish. What?
Or I'm curious as to your thoughts given that move.
Yeah, today, I think, Dave, you're seeing a broader rally in tech, and so everything is green. I don't know specifically to what's happening at Palantir. We like other names better. We think that Palantir has done a really nice job in terms of getting their momentum going in AI, but we like other stories better.
What do you like best heading into?
Wait. Hold your horses for just a flip and flapjacking moment. Wait a minute. When you have a sell rating on a stock, that has to be more than just, well, we like other names better. That's baloney. That's a bunch of baloney. If you put a sell rating on a stock, that means you're bearish on that stock. That means you think that stock's going to do bad. You need to get out of it. So that's just like ridiculous that he just kind of backed out of that one, like, oh, I like other stocks better. No, like if you want to have a hold rating on a stock and you want to go and say that, okay, that's fine, right? Or if you want to have a buy instead of a strong buy on a stock, okay, fair play. That one's pretty good. They got momentum going, but some other stocks I like better. Fair. But when you have a sell, it's a whole different situation, right? A whole different situation. So that was a little ridiculous to back out the way he just did there.
Given the tougher.
Either he didn't want to face that, or maybe they're going to go more neutral or bullish on stock. Maybe. And so he didn't want to say too much. I don't know. We'll see, but that didn't make any dang sense.
But also the second half ramp in AI revenue.
Microsoft's our top large cap name in software. Amazon's our top internet name. And then we like Salesforce.com for margin improvement. Their margins are at 30. We've said this. They're on a diet. They can drive incremental margin upside.
Fair play. Yeah. Alrighty, next one up here. Nvidia hits a record high. Let's hear these folks argue about some stocks, and I'll react to that and give my opinions.
Pushing back towards $200. Nvidia is hitting an all-time high because chips have been crushing it. Best sector this year,
Nvidia's on a move to
semiconductors.
1,000.
That after having their best year, the SMH at least, in 20 years last year. Christina Partsenevelos joins us now because KeyBank reiterates Nvidia's overweight. You do have some other calls in the space, but your beat has been going crazy.
I know, and I just happened to take a few days off during all of this. But let's start with AMD because it seems like it's a little bit less optimistic. Analysts at Northland Capital are saying, hold your horses on AI. Yes, it's big, but it's not as...
That's my line. Hold your horses.
...as investors are thinking, which is why...
Hold your flipping flapjacking horses.
They are downgrading AMD on valuation to a, quote, heck if we know rating. They believe right now AMD's AI earnings potential is just too inflated at the moment. That's why you can see shares are down slightly. But not the case for Nvidia. That stock is up, 25% year to date after a 240% ride last year. Speaking of Nvidia, Nvidia's CEO Jensen Huang just made his first visit to China in 4 years, just over the weekend. It's unclear who he met, but the visit does highlight Nvidia's concerns about U.S. chip restrictions and this growing competition from local alternatives like Huawei. He also visited Taiwan to meet with Taiwan Semiconductor to secure production capacity for its current and upcoming AI chips. But not everyone thinks Nvidia is number one for 2024. Morgan Stanley is replacing Nvidia with Western Digital as its top pick with a new price target of $73, and that's why it's pushing shares higher right now, over 4%. And the analyst Joe Moore says the stock is dirt cheap and NAND prices, which is really just the memory is not associated with AI, so just think of it as a separate type of memory. And he said those prices are ripping higher. And then the major catalyst too is in the second half of this year, Western Digital will separate its NAND business from its hard disk drive, aka the storage business, which should unlock.
Yeah, I know of a stock that I like a lot better than Western Digital that, you could kind of group it into a similar space. And that stock is Micron. I don't personally own Micron stock, but if you told me today I have to buy Western Digital where it's at, or I had to buy MU Micron, I would take Micron any day of the week. Just my opinion on that.
Additional value. So that's why they're upgrading Western Digital and in replacing it instead of Nvidia.
Jason, you want to chat about what's been going on with Nvidia of late?
Yeah.
I mean, I remember this stock has just been incredible. You pick your superlative. You're the shareholder in it. You tell me how you're feeling about this move and whether you think it's a little too much, whether it's completely justified.
Yeah.
I want to know what these guys are going to say when Nvidia is 1,000, like not that long into the future. Like that's what I'm really curious about. They think 500's wild. Like wow.
Every time I say that, it keeps going higher, right? So the stock, to Christina's point, up 240% last year, 20+% this year. You know, think about the Meta move, 300,000 chips that they bought, right? So the demand is extremely robust, 300,000 H100s, right? And they're still innovating. They're on top of that build. So for me, the semi space, the cyclical space, they call them the new transports, all these things that we've talked about forever. It's very much in play, and I continue to think there's upside momentum there.
Yeah, Joe.
The concern, look, Nvidia is nothing more than a reflection of what Jimmy's talking about with the animal spirit. It's a strong positive momentum and really the desire for ownership of quality within the market. We all know where AI is. The setup for the semis this week is somewhat concerning when you think about, well, where do we kick off semi earnings? We've got Texas Instruments, and then we'll hear from Intel. Texas Instruments has had 5 quarters of struggles.
You bounced on that one too, right?
I did. Weak demand for industrial equipment. Analog's going to be down double digits once again. So the setup for semis this week can be a little bit complicated when you're hearing some of the fundamental stories that certainly aren't going to sound as good as what you hear from AI, AMD, and Nvidia.
That's a good distinction, Christina, isn't it? The tale of two chip kind of segments, whether it's on semi, Texas Instruments, NXPI versus the others that are getting all the limelight.
Yeah, and it's a great point by Joe, just because auto sector is also a concern, so that's weighed on semi and a few other like NXPI. Texas Instrument is exposed to EVs, but not so much. They're more diversified, so it seems like some analysts are saying, hey, the bottom may have hit for Texas Instruments, despite, the 5 quarters of potential weakness. There's still some mixed reviews on Intel, but if I may just bring it back to Nvidia, the thesis that Northland Capital had on AMD, they are arguing that there's a lot of stockpiling happening with these AI chips. China is going to slow down its demand in Q3 once they buy all their chips and start using alternatives. So I wonder why that thesis isn't used for Nvidia, let's say, beyond the second half of this year, and why there isn't maybe more concern that this may taper off by the end of 2024.
Well, we'll have to wait and see what happens with their guidance and what the analyst community has to say about it. Christina, thank you. I appreciate it. Christina Partsinevelos.
Yeah, Nvidia is looking really good for this entire year. And that's why I think there's a potential, within 12 months, meaning probably with less than 12 months, I think there's a real potential that Nvidia could be $1,000 to $1,200, just to be honest. Why are they looking really good in 24? And keep in mind, I don't own any Nvidia shares, but I think they're looking really good short term here. And the reason being is they should just continue to post incredible numbers quarter after quarter. One, we know the demand's still going to continue to be there. 2, we know AMD's been lagging. So AMD is going to try to ramp up their AI-related business in 24, but they got a big game of catch-up to play there, right? So they still don't really have a major competitive threat in the market. They will a year from now, 2 years from now, because AMD will be kind of scaled out by then. And the third component is H200s hitting. I believe those are going to hit in the back half of this year, in 2024, which... you see what they get for the pricing of the H100s. Do you think they're going to get more or less? More, of course more. They're going to charge probably $5,000, $10,000, $15,000 more per chip for the H200s than the H100s, more than likely, I would say. And so, therefore, they got a very good revenue and profitability situation going for themselves in 2024. I think the real question, in my personal opinion, is 25, and that could be when maybe demand starts to taper off a little bit. But between now and then, could Nvidia run to 1,000 and 1,200? I think there's a decent probability that could happen. So if I was a short-term trader, I would have bought Nvidia heavy months ago. Tech rally draws 1999 comparisons.
It's a new all-time high Friday, and it's causing some to compare it to the tech-led stock market party of 1999. Our Deirdre Bose is digging into that for today's Tech Check. Morning, Dee.
Good morning. We've heard that before. We're probably going to hear it again. But so far, at least, this moment of AI mania and tech's rally, it has nothing on the dot-com bubble. But it doesn't mean that Wall Street isn't getting a little nervous. A note from strategist Ed Yardeni, it's making the rounds, warns that potential Fed easing risks fueling irrational exuberance. He even asks, is Nvidia as today's Cisco, noting that it's, quote, starting to remind us of the parabolic ascent of Cisco stock during the tech bubble of the 1990s. So let's break that down. Nvidia would have a lot further to run before any kind of crash, which he does acknowledge. Back in 1999, Cisco had a price to earnings ratio of nearly 150. Nvidia's is currently 80, but its forward PE based on expected earnings in the next fiscal year, that's 50. Cisco's growth outlook back then.
No. That's that should be in the 20s when it comes to Nvidia's forward PE on that stock right now.
It's just 30% versus.
If you look at what Nvidia should bring in 2024 based upon analyst estimates, Nvidia should be trading in the 20s right now. The highest would be in the 30s, but it should be the 20s actually for Nvidia.
Is expected growth this year at 119%, nearly 60% next year. So yes, Nvidia shares, and we made this point before, they have more than tripled last year, but that actually lagged the fundamental growth of the business. Earnings nearly quadrupled. Now, the question of irrational exuberance, however, may be more relevant in other areas of tech, like software sector, whose rally has been fueled arguably less by AI, more by the prospect of Fed rate cuts. And that is looking a little frothier. The software ETF, the IG, that's up 25% over the last 3 months, and it's outperformed the broader NASDAQ this year. So while investors, they typically pay for growth and future profitability in these software names, growth estimates have come way down as well. Rate cuts, that could make those valuations look better, but it's unlikely to help the fundamentals, especially if AI spending accrues to new names, not yet public, or the mega caps. Lastly, guys, no sector has done better than semis this year. On that note, I leave you with Jensen Huang dancing in China. I know you showed it earlier, but I can't get enough of it. Counterpoint, though, let me just show you an AMD stock because I saw this as I was coming to air. Those shares are down 3.5%, kind of an outlier in the semi space today. And that's on a note that said that AI spending may not be that big. It's going to be big, but not that big. And it's a good reminder of what happens at these high expectations and if these companies, especially the semis, don't meet them.
Yeah, so what do I feel? Do I feel like we're in a 1999 moment right now for tech stocks? And the answer to that is no. Earnings are justified. Actually, a lot of these tech stocks are trading very undervalued right now. Meta's insanely undervalued. Look at what they're going to likely bring in 2024. Look at their growth rates. I mean, it's like they're very undervalued. Amazon, I think, is, if you look at Amazon's future growth, I mean, that company's still undervalued. Nvidia's, look at what they're supposed to bring in 2024 and look at the, forward P of that stock. Based upon growth, Nvidia looks undervalued right now. That's another reason I think it could run to 1,000 here this year. And so you go through these stocks, Apple's trading a little rich, okay, but it's not out of control rich. Microsoft might be trading a little rich, but it's not out of control rich either, right? Tesla's trading a little rich, but Tesla's been going through a tough time in their moment. Their profitability should start to tick up again in the back half of 2024 and moving forward. So I don't think we're in a 1999 moment. I think that argument could have been made very strongly in 2021. I think you could have made that very strong argument in 2021. But let's just be honest, these companies are at very different places than they were in 2021. Look at what they brought in 2021 for revenues and EPS. And look what these companies are supposed to bring in 2024 for revenue and EPS. Almost every single one of the big companies is like a night and day difference between their revenue and EPS expected in 2024 versus where it was in 2021, right? And many of these stocks are still not even back to where they were in 2021. And the ones that have surpassed have only a little surpassed. Even Nvidia, the crazy gain, Nvidia hit nearly 400 in 2021, if I recall, right? And that stock is, trading 500 something right now. So even that one, the craziest one, still isn't even close to a double up of where it was back in 21, despite their business being exponentially better in 2024 than it was in 2021, right? Already last one up here from Palantir co-founder and his opinions on AI, Palantir, all this good stuff.
Economic Forum in Davos, alongside discussions of global conflicts, including the Russia-Ukraine war and the Israel-Hamas war. Join us right now to discuss the intersection of geopolitics and technology. Joe Lonsdale is here, founding partner of 8VC, which is backed defense tech companies like Anduril and Epirus. He's also co-founder, of course, of Palantir and co-founder of a self-described free speech university in Austin, which I want to talk to you about. But I want to ask you, I want to start with just an AI question. Mm-hmm. Everybody was going, AI crazy in Davos. And the thing that I can't figure out is whether AI is going to be so pervasive that it becomes sort of a commoditized feature of basically every piece of software that everybody has, or whether it's actually going to be going to ultimately create new standalone products that create new value. Meaning, you look at some of these, if it's just going to be a feature of everything, then the question is how much more value is it creating in the companies that either already exist or the new companies? Do you see what I'm saying?
Yeah, well, AI, Andrew, is going to be something that impacts productivity. That's what really matters here, right? At the end of the day, what are we all doing with these markets, with these businesses? You want to create more with less. You want to create more prosperity for society. When you have something like electricity, it takes decades to work its way through everything, right? Electricity, I think 30 years in, you finally have factories designed to use electricity. But even in the first decade, it did a lot of other things.
Right.
AI right now, it's going after a lot of areas. We're seeing already how it could raise the margins, how it could address things. There's lots of service areas of the economy. I'll give you one example. Healthcare billing is a $280 billion revenue area, and we're already seeing how AI is probably going to be able to double the margins in that area, which basically means you pull $100 billion of spend out of the economy. That's new wealth it creates through productivity. There's probably going to be trillions of dollars of that the next 5 years.
Do you think in the next 5 years that happens?
I think you actually see by the mid to late 2020s, economic numbers showing up where productivity's gone up.
Do you think, though, I was thinking Con Ed, which is electricity in New York, it's not a great high flyer of a stock because at some point it does become commoditized. So is there a period right now which is like a renaissance and then it gets commoditized? The other thing that I worry about or think about is whether we're in 1996 or 1999 where there's just going to be too much of an almost overinvestment in this area, and there's going to be a lot of collateral damage when it's over.
The way markets work with new possibilities is there always is overinvestment. There's a few big platforms that emerge that are going to be extraordinarily valuable. The same way in the late 90s you had things like Amazon born, you have Google born. Yep. Obviously, those would have been really good bets. You have a lot of other things that there's too much hype. But then basically you have these infrastructure for AI that makes a lot of money because 2 or 3 or 5 things emerge as winners there. Right. And then the whole economy benefits. If productivity goes up as much as it looks like it's going to do, that makes money for every one of us. And that's a good thing for the whole society.
Do you think there's more value in the software piece or the hardware piece? One of the things that I think has been fascinating to hear, people were talking about it actually in Davos, is Sam Altman, who was there from OpenAI, clearly has been looking around to try to raise money to actually start manufacturing chips. In the old world, chips were never considered a valuable thing to do. And by the way, maybe in 10 years from now, there'll be an overabundance of chips and nobody will care about chips anymore. But for the next 5 or 10 years, it seems like people won't be able to get enough of them.
The infrastructure of chips is critical to make this work. If you can make chips commoditized, that means the rest of us are going to be all very well off because you're going to be applying it to the whole economy. Sure. The most money is going to be made, frankly, for the S&P 500, for the big companies that are more productive overall. That's where the real money gets made if this works. But we need the chips to do that. Sam's thinking, how can I apply this technology? How do we scale it? There's a scarcity of chips. So it's really smart to do.
In the defense world, how do you think it fundamentally changes things? We were talking to your co-founder, Alex Karp, about sort of how AI is going to impact his business. He's leveraging ChatGPT and some of these other large language models as well. So the question is, do you have to create your own model? Is it really just about taking somebody else's model and applying it to what you're doing?
Well, it was really cool. I guess OpenAI opened up to defense now. But listen, in the defense world, software is becoming more important. AI makes software determinative in defense. We already have all these new companies needed in defense because the old big primes, the big legacy defense contractors, they're really good at hardware. They're pretty bad at software. Thanks to AI, you now desperately need all the new companies in defense because there's a bigger gap there.
What does that mean, determinate? Like determine?
It means
or you mean determining what lines you kind of follow?
It means determining what technologies are dominant in warfare, right? So if you have AI being as good as it is now, suddenly it really, really matters to have the best software. If you're going to be doing, you want to get a certain amount of money for a certain amount of outcome, right? So if you're going to be building 1,000 small autonomous drones for some kind of battle scenario, if you have AI, you desperately are going to need the best software companies involved in that. Otherwise, you're going to lose that battle. You're going to not be deploying it correctly.
Hey, I know that. I think you think Bitcoin is real, right? My question now is, it's become mainstream to the point of ETFs, I think it's to be harder to go higher quickly. Now, unlike, it was supposed to be that everyone can get in now and that all the ETF companies are going to need to buy Bitcoin to put it in the ETFs. To me, it's like if you bought it at $800 or $8,000, you were smart. You went through a lot of trouble to buy it. Now everyone can buy it. I think it's going to be here for a while.
There's not going to be a whole new financial story driving it from the side of buyers necessarily, although there's one type of buyer that could be very important here. AI agents are going to start doing a lot of things in our economy. And for AI agents to coordinate with incentive systems, they're probably going to use crypto. And so if this AI story works out in certain consumer areas, especially...
And then tokenizes everything.
To AI, yeah. Do you know, Kathy Wood, 500,000, $1 million... And that's year. I can't believe any. Yeah, but
they're not going to be trading Bitcoin. They might be using Ethereum. They might be using Solana. They might be using other things that they can tokenize.
Those are the three they might use, and they're probably all correlated at the end of the day. And the 500,000 story for me, Joe, is more about the macro question. Are we going to be in a massive deficit in 25 and 26 and spending money willy-nilly, irresponsibly? If so, what asset's safe? I mean, if you have inflation come up again, you have bonds sell off again with crazy government spending, that's a story I'm hearing from a lot of my friends who know macro better than me. You could see crypto do very well.
Yeah, we're not going from 100% debt to GDP back down to 30 just by waving a magic wand.
No.
How are we going to do that?
Well, you got to fire a lot of people. That's a whole other question.
Factually, no. Like if people just looked at facts and stopped worrying about opinion, the fact is, look what happened to Bitcoin in 2022. It crashed epically because stocks were going down. If stocks go down again, I can tell you what's going to happen. Bitcoin's going to go down massively. The only way Bitcoin does well is when the market's doing well. It's facts. It's not opinions. Like, it's just like crazy to me that people just ignore facts and just want to throw out opinions in regards to that. And in regards to Bitcoin, struggling here is doing exactly what I knew it would do. Crypto people are now learning about buy the rumor, sell the news. Like, that's something we always have to deal with in the stock market. Buy the rumor, sell the news. And that's exactly what happened here with Bitcoin. Everybody got all jacked up. Oh, the ETFs. Oh my gosh, buy. And then sure enough, as soon as they all got approved, boom, Bitcoin straight down from, 48K or whatever to 40K now. And, we'll see where it shakes out. I think long term it's a good thing, but short term it was a buy the rumor, sell the news event. So, all right, guys, appreciate you joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. Also, if you want to join me for the Tesla earnings live stream on Wednesday, so 48 hours from now, that 3-hour beast, check out pinned comment down there. Make sure you have notifications on so it'll notify you when I go live on there. Much love and have a great day.